welcome to the Russell Investments Masterclass. I'm Scott Fletcher. With me today is Andrew Sneddon, Portfolio Manager for Russell's Australian Diversified Funds. Andrew, welcome to you. Alternative investments are increasingly seen as a way that investors can enhance their return and reduce their risk in portfolios. Can you take us through the different types of alternative investments that are available?
Scott, alternatives encompass a very broad range of investment strategies, but they can be included in two broad categories: liquid alternatives and illiquid alternatives. By liquid alternatives, we mean strategies that can be realised for cash in the space of days, rather than months or quarters or years. And at Russell, we emphasise liquid alternative strategies, and they themselves fall into three broad categories. The first are real asset strategies. These are alternative strategies that provide a return linked to inflation, and examples would include commodities and global listed infrastructure. The second category of liquid alternatives are what we call absolute return strategies. These are strategies that are tied to the Australian cash rate and provide an additional return that overall is competitive with traditional share market returns. And the third category of liquid alternatives are opportunistic income strategies. These are strategies like high yield bonds and emerging market bonds that provide high overall levels of income to investors.
Exactly how does the addition of these alternative investments benefit an investor's portfolio?
With regard to returns, we expect liquid alternatives to provide returns very similar to those of traditional share market returns. Where they differ, though, is that they're much less sensitive day to day to the ups and downs of the share market. So as a consequence of that, they provide diversification to an investor's portfolio and help reduce the overall volatility in the portfolio. And for example, over the last year, returns in the Australian share market have been reasonably flat and quite volatile. But certain parts of the liquid alternative market, such as real assets and opportunistic income, have helped drive high single-digit returns over that period.
And what should advisors and retail investors consider when looking to add alternative investments to their portfolios?
There are two things investors need to be focused on, Scott. The first is liquidity. And liquidity is important because investors want to go into the right liquid alternative investment at the right time. And later, they want to make sure they can make a timely exit and realise their investment for cash. The second consideration is active management. And what categorises alternative investments is a wide range of possible investment outcomes. So this is where Russell's active manager selection is critical, because we want to capture the right liquid alternative asset class, and we want to make sure we capture that return with the best available active manager.
Andrew, thank you for giving us an initial look into the world of alternative investments.
Thank you.
And thank you for joining us. We look forward to seeing you again at the next Russell Investments Masterclass.